strategy. If you get your market structure part of the strategy, you get your liquidity part of the strategy, then you move on to the point of interest part of the strategy. Now, so far, we have done the structure part of the strategy, we have done the liquidity part of the strategy. Is now left for the point of interest part of the strategy. Now, there are two different points of interest that I make use of. I make use of what? I make use of an order block, and I make use of what? A breaker block. I make use of an order block, and I make use of a breaker block. Now, I'm only going to talk about the order block in this class and probably maybe introduce the breaker, but I will go deep into the breaker in the next class, not this particular class, because normally the class is meant to be 1 hour. This is already 9, but I will just finish. I'm not even done with point of interest. So the next class is when we're going to talk about the breaker and then the rules in picking a proper point of interest. It's a whole topic on its own. So now we have talked about the structure part of the strategy. We've talked about the liquidity part of the strategy. What is now left is what? The point of interest part of the strategy. Now, I make use of 2 points of interest, the order block and then the breaker block. Now, first of all, the order block is a zone in the market where there are a lot of institutional orders. Now, those orders, those institutions and the banks that trade with those huge capitals, the zones where they put their buy and sell limit orders, that is what your order block is. So the order block is made, there are 2 different types of order blocks. We have the bullish order block, then we have the bearish order block. So the bullish order block is for when you're looking for a buy scenario. Then for the bearish order block is when you're looking for a sell scenario. Are you guys following me up? No, a wick cannot be used as a break of structure or market structure. It has to be a body. Are you guys following me up? Are you guys following me up? Don't know if you can hear me. Can you guys hear me? Can you guys hear me? I'm not seeing, I can't see your test. I don't know if it's network. Is my network, can you guys hear me? Is my network good? I'm not really seeing you guys' things. Okay. Thank you. I think the network is bad. Okay. So now, after you've gotten your structure part of your strategy, by either getting a continuation or getting a reversal. Now, for continuations is the double break of structure. For the reversals is the market stretches. You move on to the liquidity part of the strategy, and the liquidity that we use to pick entries is what? Your inducement liquidity. So after you've gotten the inducement, the last part is now your point of interest. Now, for this particular class, I'm going to give a scenario for the other block. So the other block is like I said, it's a zone in the market where there are a lot of institutional orders. So now, if it's the bullish order block, this is how the bullish order block looks like. You will see a bullish order block is, this is how it looks like. You will see a bearish candle, then you see a bullish candle engulf it. This is how a bullish order block looks like. You see a bearish candle, then you see a bullish candle engulf. It's kind of like this here. This is what a bullish order block. This also is also a bullish order block. So that is what an order block is. A zone in the market where there are a lot of institutional orders. So for a bullish order block, you see this bearish candle down, then you see the bullish one that engulfs it and covers it. That is what the bullish order block looks like. If it's a bearish order block, you will see what? A bullish candle, then you see a bearish candle that's what? That engulfs it and covers it down. So this is what a bullish order block, this is what a bearish order block, this is what a bullish order block is. Then this is what a bearish order block is. So bullish order block, bearish order block. And if you want to pick your entry will be from the middle, the demarcation of the end of your order block, the middle of it here, the demarcation, what your entry will be from. Same as this, the middle here, demarcation. Then for a scenario where there are wicks in your order block, for example, now if you have a wick in the body, a wick here, Now, most of you will ask, if you have a wick, how do you pick your entry? So now this is how you pick it. If the wick of the other block is smaller than the body, for example, this is the whole body here, and this is the wick of the other block. And from the looks of things, the wick of this other block is smaller than the body of this other block. Then you can pick your entry from the wick here. But it's in a scenario where the body of the other block is really small, let's say it's small like this, and the wick of the other block is longer than the body of the other block. If you want to pick your entry, you pick your entry down from what? The body of the other block. That's if it has wicks. If the wick is very small, you pick your entry from the wick. If the wick is longer than the body, then you pick your entry from the body of the other block. Are you guys following me up? Well, you can't see. Can you guys see my screen? Can you still see my screen? I said, if the other block has wicks on it, normally, if you want to pick an entry from another block, you pick it from the demarcation of the other block here. On the demarcation of the other block, for example, this is the bullish candle. This is the bearish candle, and before the bullish one engulfed it. If you want to pick your entry from what? From the demarcation here. But there are some times that you see wicks in your other block. So for you to know where to pick your entry when you have wicks in the candle of your other block. So if the wick for this buy other block is here, and the wick of the other block is small and smaller than the body of this other block, if you want to pick your entry, you can pick your entry from the wick of the other block. But if it's a scenario where the body of the other block is really small and is smaller than the wick of the other block, let's say the wick of the other block is extremely long, if you want to pick your entry, then pick your entry from where the body of the other block started from. Do you guys understand now? How is my screen seizing? I can't show it on the chart except I see another block that looks like that. Don't you guys know when you have wicks in your other block? It does not really show up like that. But if you have wicks in your other block now, I don't know how else to put it. I don't know how else to put this. And I'm not really taking other block trees like that, but hang on. Let me see if I can find. If you have wicks in your other block, I don't know how else to put this. Okay, this is an example now. This is another block, and then there's a wick on the other block. But since the body of this other block is large and the wick is small, if you want to pick your entry, pick your entry from the wick here. Simply because the body of the other block is bigger than the wick on top of the other block here. But if it's one that the wick of the other block is extremely long here, something like this, this is the wick of the other block and the body of the other block is tiny. If you want to pick your entry, then you can pick your entry from the body of this other block here. That was why when this market did this small reaction, the reaction actually came down to the body of this other block here and did not react from the wick of the other block here, reacted from the body here. Although that the market was not overall bullish, but that was where the reaction occurred from before it now went up and started reversing back down. Do you guys now understand? So, so that being said, it's now time that you combine everything. So now, majority of the trades I take now is not really with an order block because markets respects more of breaker blocks in the pairs that I trade. And so, but I'll give you an example with the one I have here. For this particular example that I gave here, when market gave us this double breakout structure here, when it took out this zone, this high plus this previously existing zone here, we got a double breakout structure. After that, market pulled back and gave us our inducement before it pushing back up. So we have what? We have 2 out of 3. The first one is what? A double breakout structure. The second one is what? Is the liquidity, which is what? The inducement. So it's now time to look for the third one. It's now time to look for the third one, which is what? The point of interest. And from this scenario, we're looking for an order block. And like I said, if it's a bullish scenario, you're going to use what? A bullish order block. And if it's a bearish scenario, you're going to use a bearish order block. So in this scenario now, we're looking for an order block that exists inside the whole structure movement. So we got our what? Our double breakout structure here. We got our inducement. Then the next one is now the point of interest. So your point of interest now in this scenario is what? An order block. Now, another block, we're looking for a bullish order block, and a bullish order block is made up of two things. First one, a bearish candle, then a bullish candle that engulfs it, which is exactly this. And if I pick your entry, you pick your entry from the middle. That is the demarcation of it. That was why gold bought from here. Then your stop loss will be at the last candle of an order block, which is, this is the last candle here. So the last candle of the other block is below here. So this is where you put your stop loss. So this was the trade on gold. That was why gold bought from here. And immediately price tapped there, started reversing back. Are you guys following me up? Person asking me how long I'll wait after I set up. How will I know how long it will take market to trigger my entry? You don't control the market. Now you wait however you will wait until market triggers your entry. How will I know how long I'll wait for a setup? I don't control the market. So this is it for this first example. Now the other examples I have here, market did not actually react from an order block. Now there's, like I said, there are 2 points of interest that I make use of: order blocks and breakers. Now a breaker block is basically a failed order. I will not get into it here in this particular. I just want to give you an example. So you know that even after getting your structures and your liquidity, that even if you don't use an order block as an entry, market will also react and still respect your analysis. So when we got this double break of structure, got our inducement, a breaker block is what you call a failed order block. Now, this is what a failed order block is. It's basically this. So this is an order block, a failed order block. A breaker block, that's a failed order. This is not me teaching the topic. I will talk about this in the next class. That's because teaching this particular topic comes with a new topic on its own. But I'm just giving you an example. Because people will be wondering why market did not now come and sell from this order block here. There's also another point of interest I make use of, which is a breaker. And there are rules in picking those points of interest, which I'll get into in the next class. That will now tell you to know whether to use an order block or to use a breaker block, depending on the month that market presents and the rules in picking a point of interest. But this market sold from this breaker because in the rules of picking a point of interest, one of the rules says that you pick the point of interest closest to your